Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from NewtekOne, and it's not your typical boring business update. Let's just say if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we chat about all these filings. The big news here is that NewtekOne has entered into an updated agreement to sell more of its stock. Think of it like this. They're adding more slices to the pie, and that means each existing slice might be a little bit smaller. They've updated what's called an equity distribution agreement. This agreement is with a bunch of different companies that will help them sell shares of their stock. They had an original agreement from 2023, and this new one basically changes that old one. The main thing is they are increasing the number of shares they can offer and sell. Before they could sell up to 3 million shares. Now they can sell up to 5 million shares. They already sold about 1.1 million under the old agreement. So this new agreement lets them sell the rest of the 5 million. They're bringing in a few more companies. Think of them like sales agents to help sell these shares. These companies are called placement agents. So how are they selling these shares? Well, they're doing what's called an at-the-market offering. This means they'll be selling the shares directly on the stock market, like the Nasdaq. They can also sell to market makers, who are companies that buy and sell stocks to help keep the market running smoothly. They have the option to do this in private negotiations if they want to, but the general theme is they are selling those on the open market. If you want all the nitty-gritty details, you can check out the full agreement that's been filed as an exhibit to this report. It's like reading the fine print, but it can be important to know exactly what's going on. Alright, that was the main deal. Now let's get to my overall take on what's happening here. NewtekOne seems to be taking a pretty standard approach to raising capital, in other words, cash. Selling more shares helps them get money. However, when a company issues more stock, it dilutes the value of existing shares. This means each share represents a smaller piece of the company. That's just a fancy way of saying that the slice of the pie gets smaller. On the plus side, this cash infusion could allow them to invest in growth opportunities or pay down debt. Looking at their listed securities, it seems like NewtekOne is relying on debt financing a lot. You see a lot of notes, a fancy word for loans. So you see a company taking on a lot of debt and diluting the stock. Debt can be dangerous to service during times of high interest rates, which, as you probably know, it is right now. So here's the final word. NewtekOne is getting more aggressive. They're clearly looking for ways to fund their operations and growth, but they're also making moves that could affect current investors. The big question is whether the benefits of this cash outweigh the risks of issuing more shares and taking on debt. Alright, that's our breakdown of NewtekOne's latest moves. What's your take on these decisions and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.